All right, and welcome back for another episode of Carnivore Trades. Today is Tuesday, December 27th, 2022. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, into the markets here. So a pretty choppy day, all things considered. And just as I was setting up to do this video, we got a fake print here on the spiders. That's not the actual low of this 10-minute candle. That is down to 380.71, which is right where that 100 moving average is on the 10-minute. So be interesting to see if we go down and touch that tomorrow, but that is a little fake print there. Overall, pretty choppy day. A couple of things. So it's kind of a mixed bag right now. But here's the positives and negatives. The positives are, I'm going to use the ES here so it's a little bit easier to visualize. The positives are since Thursday's little dump, we've had higher lows. So that is a good sign here, at least for the market here. It's putting in higher lows off of that potential kind of failed breakdown area, which is somewhat constructive. Another thing you have here, and flipping back over to the spiders, because I think it's just easier to see on these charts here. You also have a possible diamond pattern here. So kind of a broadening pattern here at the lows. And, if you can inch up here, you can put in that kind of right side of it, and then we could push higher. That is definitely possible. The negatives here right now are this 4-hour area. So 383.38, that's this red bar high here on the spiders. We've had a lot of trouble with that, right? Since last week. We've really been unable to get above that. That's the gap down area from last Thursday. And you see, we recovered, and now we're grinding here. So that is constructive in the near term. You also have the hourly. You can see right there, this is not a terribly, this is fairly constructive pattern. We cannot close above the 50-hour moving average though currently, so that is also a negative. But obviously you can see we're struggling with this now. Who knows? We could gap up tomorrow and clear that. I think that's kind of like the master level right now. If you get above this on an hourly close, I think the market does push up. But for now, we're having trouble with that, and that is a negative. Another negative. The Qs look like absolute crap. I mean, this is barely off the lows here. This is much more, much closer to a bear flag here. Take a look at the 4-hour. That's a bearish inside bar right there. And you're in the lower half of that. So that is setting up possibly for a move lower. I will say though, here's kind of the flip side of that. The Qs are so beat down here that it's almost bullish in a sense. Right now, if you take a look at all the stocks that are down big, it's all the retail investor darlings. Tesla blew through 1010, just blew through 1010 in the last couple of minutes. Take a look at Nvidia today, down 7%. This is getting crushed. Just look at ARK, right? Down 3.7%. Teladoc getting destroyed. Roku, Zoom, PayPal. Unity Software, just these companies, Salesforce, all these types of growth type names here. Look at Coinbase at 52, actually at all-time lows. AMC, GME. So again, it does look like retail is starting to exit here and possibly harvest some tax loss selling. I do think there is a chance. In fact, not even a chance. I'm actually predicting it, that we do rally up. That may have to wait until the end of the week. Why? Well, the worst kept secret in the entire on Wall Street right now is JPM's little collar trade, and that's at 35.38. And it does appear that we're being pinned right there. Every time we get a little bit farther away from that, we try to break out, we get pulled back. Obviously we tried to break down last Thursday. They snapped us right back up. So it does look like that will, probably expire right at the money, I would assume. And then after that, I think you can get some type of a relief rally. We talked about this on the spiders at 386.21. There's also a fake print up there as well. The Thursday's candle, we never got to 386.21. That is a fake print. There's a gap there. There's also a gap up here at 389.63. I think these levels are reasonable to get hit. It's not like you would damage the bearish structure of this down move. And then, again, Another negative here, I'm going to get rid of this here too. Another negative of, the market right now is this is basically, a bear flag essentially. But you could go up here and fill this gap and still maintain that kind of bear flag type structure here. So I think the market right now, as far as the triple Qs are concerned specifically, I mean, they look terrible on a technical basis. And we can see here on the daily, barely off the lows here from last Thursday. It is a weak look here, but it's getting oversold. And I think a lot of this is tax loss harvesting. And a lot of the time you get the January effect into the year. And, that's very indicative of, or it's very well represented by, stocks like ARK or ETFs like ARK, the Teslas, the PayPals of the world, things we just talked about here. So, again, right now we have a little bit of a neutral bias here. It is the last week of the year. We have kind of, daily bearish pattern here. We have technically a 4-hour inside bar, but the hourly is looking constructive and you are trying to consolidate in the upper range of this. I'm thinking at this point, if we don't push through this at any time, maybe tomorrow, it's likely they keep us chopped in that range until the end of the year. So that may be, we may just be in for some chop fest for the rest of the week. It's only 3 more days. But at that point for the new year, I do think we get some type of a counter trend bounce here, even if it is only to gap fill, maybe a little bit higher. That remains to be seen. But especially in the triple Qs here, we're definitely, like 100% seeing tax loss selling. And I think we're seeing a lot of retail kind of basically capitulate on some of these names that are down 70, 80, 90% here. So that's what we're looking at moving forward here. Markets are set to close in about 2 minutes. And yeah, closing down in the lower range of today. Remember, that is a fake print. The Qs are getting close there. So we're not going to close above the 50 moving average on the hourly spiders. So keep that in mind going into tomorrow, though. Again, to go back to the 4-hour here, the pattern's not terrible. This is, yes, it's technically an inside bar, but this is still an up move and sideways consolidation. I would like the hourly a lot better if we closed above the 50-hour moving average. But really, until you get above this red bar high, I give more of a neutral, possibly even a slight downside bias here to the market. Anyways, Dow is leading, and that's not a bullish sign here. We want to see the NASDAQ. We want to see the Russell lead. Neither of those things are happening. Still seeing kind of a flight to safety, and I still think the Qs are just seeing a lot of tax loss selling pressure. Same thing with the Russell 2000. Small caps, risk index, these things have not performed well this year, so it makes sense to see this under pressure here until the end of the year, but we'll see what we get going into the end of the week. Semiconductors still on the weaker side here, down 1.7%, and basically testing Thursday's low. So that, that was a 50% fib. We got a bounce off of it. It really only lasted for a day. Basically down testing that area. Now, we will have some support if we do inch down right at that 618. You have the gap fill right there at 193.97, and then the 618, 192.70. So right in that 193, 194 area will be some really good support on the semis if it gets there. Again, we could just get stuck sideways, jammed sideways here. Let's take a look at NVIDIA. Pretty bad breakdown here. We talked about that last week, and that just knifed right through that blue trend line, which, goes back to the 2020 highs. So back below that now. And yeah, NVIDIA in rough shape, back below all moving averages. Again, that gap fill down there is kind of your near-term target. There's also another little gap just below that. But yeah, semis continuing to be under pressure here, and that is holding the NASDAQ down. All right, so there's a closing bell. We got a little bit of a bounce here. We'll get back to the spiders by the end of the day. But yeah, semiconductors, those are the levels I'm looking at. There's still a chance we could hold this area. I've seen stranger things happen, but is definitely, as of right now, a pretty soft bounce, all things considered. IGV, same kind of chart here. So, moving lower here, we kind of got a little test candle last Thursday, and we're just stuck inside of that. Not the greatest look. Ultimately, these are all going lower no matter what, but, it's holding up. It's just kind of been a grind lower for IGV, right? We kind of had up this sloppy, we had this gap up, and then we just never really advanced, and just been kind of a grind lower here. We'll see what it does going into the end of the year. Again, I think this, like everything else, will get some type of a counter trend rally once the new year starts. Transports, really kind of on the little bit stronger side, I would say. Yeah, spiders down 38 basis points, and transports only down 0.25%. Again, not a really good pattern of strength. We did have a nice test candle. We hit that weekly green bar low I talked about. We bounced off of that. We closed above it, so that's a positive here for the market. You're still below this breakdown bar. You're still below the moving averages. The Dow transports have a lot more work to do. And again, this is all going lower here. Anyways, slice it or dice it, but in the near term, this is holding up okay. So we'll give it the benefit of the doubt for now. Again, I think we're going to have to wait until the new year to really see any type of movement here. It does look like we're kind of just wedged in this little trading range. Anyways, over to rates. So TNX continuing higher, back above all 4 major moving averages, up 2.9% on the day. The 2-year, let's talk about this. So we have an hour left. It's 4 o'clock. But we are, as of right now, if we were to close right this second, we negated this inside bar. So we got to get back above this yellow trend line. And it's, it's trying, you got to up move, and now you're consolidating bullish. It can get there. It's only probably like a couple basis points away. It can definitely get there. But if that fails, that's a huge, and I mean a huge, gigantic negative for the market. Like, I can't even describe how big of a negative that is, because that means that interest rates are probably going to keep going up, especially on the 2-year. So, and you'd have a failed inside bar there on the daily. You still have the head and shoulders, but the inverse head and shoulders, and that target never got satisfied. But this really has to hold, if you ask me, for this to have any chance of filling. So keep an eye on that tomorrow. We'll definitely talk about that. But 2-year coming under pressure here. TYX, that buy signal worked out. It just took a little bit of time here. I did close my long out on the yield last week, so I didn't get to participate in this nice 3% move here for the TYX. But either way, I think it wants this pivot at 40.50. So we're just going to draw that in there. It's above the 50 MA currently. Right about there, 40 to 40.50. That's going to be good resistance for the TYX. And we'll watch and see what it does there. But nice little move for interest rates today, and that did help put pressure on the markets. XHB, so home builders, again, just kind of stuck in this range. Nothing terrible. They're still leading the market here. They're holding up well. If the market does get a bid, this will be a leading sector, and then this sector will be a short next year. VNQ, same thing, although much, much more on the weaker side as we close below this trend line here. This is now resistance here. I do not like VNQ or real estate stocks at the current time. I do not like financials either. XLF, basically flat on the day, so it actually held up okay. JP Morgan was green up. Yeah, JP Morgan up 35 basis points today. But again, what kind of pattern we have here, guys. So, up move, little bear pennant, definitely a case. Could get up here and go fill this gap, just like we talked about with the spiders. Nothing to say it can't go fill this gap, but this is not an inspiring bounce. It's the opposite of a V shape. It's a dead cat. It's sideways consolidation. It is setting up for a move lower. Again, doesn't mean we can't get a counter trend rally in the beginning of the year for tax loss, the January effect. But this is not a pattern of strength, and we have to be aware of that moving forward. Same thing with the broker-dealers. Outside candle down today. So not a good look there. Also kind of a mini bear flag starting to form here on the daily. So keep these things in mind here. This is a sector that I'm going to be attacking to the short side. We've already done it a couple times this year, and we'll do it again. So if you want to get in on that, come find me at carnivoretrades.com. We're closing out an absolutely awesome year, by the way. Just a couple days left, and yeah, it's been an amazing ride. Thank you to everybody who's been supporting me all year. It's been a great ride so far. Anyways, on to energy here. So crude getting a nice little bid. It did back off of the highs. Yeah, intraday looks like we did back off a little bit. And yeah, nice little dump there into the COMEX close. We're getting a little bit of a kind of float up in the after hours. I don't think crude has bottomed. I know I've kind of echoed that sentiment here. This is not a great reaction off of the 50 moving average. If we get chop and it puts in a strong bullish pattern, yes, it can go higher, but I am not in that camp right now. I think, I said it has to test 82, 83. We didn't quite get there. We got to 81.18. Doesn't mean we can't do that tomorrow or the next day, but I think we got one more low to make in crude. And then I think we could possibly bottom here, and perhaps the 30-year and perhaps the 2-year are kind of telling us that, if this pattern does in fact fail and yields go higher, it's probably going to be a tailwind for crude. So, keep that on your radar. But, yeah, I do think crude has one more leg down. That's just the way I'm seeing it here. XLE still holding up. This has been a strong sector, up 1.7%, and you closed above this previous pivot low. So that is a sign of strength there for XLE. It didn't quite get above the 50 moving average, got very close and backed off. And didn't close above this high here, which is, not terrible. But I mean, it got outside of this range here. So we were stuck kind of right at about 87.30, 87.40. Right, for a couple of weeks, and we got above that today. So that is a sign of strength. That's holding up well. I still don't think it's done back in filling. Just be aware of that. But that is a pretty good looking close there, at least on a relative basis here. So we'll give XLE the benefit of the doubt this week. XOP, same thing, although did not get above these pivots, but it had an outside day up. So again, closed right on that 200 moving average, and got rejected at the 20. But again, energy is still a strong space, still a strong sector. OIH there with an outside day, a little doji, nothing great though on the daily. This still has more backing and filling to do, and there's a lot of resistance, at 308, 310. So just be aware of that. You could even, let's take a look here. You could probably even draw on a trend line here. Yeah, you basically right into that, close just above it. So a little minor trend line there on OIH. But again, I still think this is going down to 250. That's really your good trade level there. Anyways, nat gas, a little gap up and then kind of backed off here, filled the gap on an intraday basis. Now it's just kind of chopping around. We'll see what it does. It's kind of a sloppy pattern here, but it did, they defended it on Friday. We got a nice inside bar, continuation up. So this is still not a terribly unconstructive pattern here. I do think at least wants to go test 565, which would be this red bar high. If you get through that, then $6, 50 moving average, 20 moving average, right in that area there. And obviously, if you get through that, there's a big gap just above 650. So those are the levels there on nat gas. I wouldn't want to see it take this tail out, although there is a lot of support around 450 as well. So we'll see what we get here with natty. Dollar index, really kind of a nothing burger. Again, the dollar continues to be somewhat decoupled from the market. It was for a long time, really up until right about here, right? Or I would say right around middle of November, right when we got that CPI number. That's when the dollar really started to decouple from the market, right? You see the dollar has been down for the last month, and the spiders, since, 12-1, we had some chop, then we went up, and the market has been down, and the dollar has also been down. Some of this has to do with rates coming back in, if you ask me. I still think the dollar has one more push lower, and then it will be a major buy. Gold had a nice outside day today, although it didn't follow through. It did come back in here. Nice pop there and a pretty good drop intraday. But gold got a bid there. I do think it wants 1875. I would not be a buyer here. If you're aggressive, you can take it, for a long up to 1875. I just don't think there's much more upside past that personally. Silver probably wants to go test 25, maybe even a pierce at this point. But again, there's a lot of resistance up here, so just be aware of that. And then platinum, not a terrible candle. So we had a big surge on Friday, and now you just have like an inside hammer. It's hanging in there. Okay, I like platinum a lot for a move to 1200. You guys know that. Then copper, outside day up here, up 1%, but it did back way off the highs here. So big move and then a surge. And then it came way back in. This probably wants to go fill that gap there. So tough to make a lot out of it. It's a really odd kind of a day there for copper. The China's reopening and so on and so forth. That kind of gave it that little gap up, but it did give back a lot of those gains. So we'll see what it does here. You still have a bearish inside bar here on the weekly, so just be aware of that. A close above 396 on a weekly basis negates that. And then lastly, Bitcoin not doing a whole lot here. Again, down 1% on the day. Really just kind of soft here. Had a pretty good sell-off intraday and now getting a little bit of a bounce here. But Bitcoin leading the market lower right now. It'll be interesting to see if Bitcoin starts to sell off too. Is that kind of an indicator that maybe, it's very much like the coin trade, Coinbase, ARK. Bitcoin's a retail darling, right? So if this is leading down too, it could be more tax loss selling in that space as well. But it has been a leading indicator in the past, although it's been in such a range here for quite a while that it's really hard to make too much out of it. But anyways, guys, back to the spiders here. So finished down 40 basis points today. We do have a fake print, so maybe that gets hit tomorrow. Interestingly enough, that still leaves you with higher lows here on the hourly. So it doesn't really tell us a whole lot about tomorrow. Again, constructive nature is that you have the down move, the attempted breakdown of V shape, and now you're consolidating beneath resistance. The issue is, we have that JPM collar, worst kept secret, and end of year tax law selling, plus the NASDAQ looking terrible right now. Anyways, guys, we'll see what we get tomorrow. I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.